Elis is still at -6%, and Cintas is at plus 81 or 82%. So there is a difference, obviously, and one thing is the market. Cintas is in the American market, so most of course, there's also a Canadian business and also in Mexico, and they have some subsidiaries in Europe, but most of it is in the US, and they have a really strong market share. They're in uniforms, and that's basically the focus. Elis, on the other hand, is a market leader in Europe, in many countries in Europe, most of the countries, I would say, after they bought Berenson. And they have also quite a good business in Latin America. Cintas is basically a little bit more than twice as big as Elis, although Cintas has a focus on just the uniform part of the industry, and Elis basically services everything, so healthcare, hospitality, and industry, trade, and does also quite a lot in flat linen. Focus of Cintas is just uniforms, and still they are twice as big. Cintas has obviously a higher portion of stock-based compensation. So when your share price is going up, then you can save a little bit on your wages and give them more stock options. And that might be the case. And then at the end of the day, you have here the free cash flow. And this is $1.2 billion versus 995 million euros. Yeah. No comment there. Total assets, interestingly, are basically the same. So when you take the balance sheet, it's the same. It's a wash. And even goodwill, when you acquire companies and you pay more than the fair value of the assets, then you have goodwill on your papers. Goodwill is similar. Elis has a little bit more. But of course, when you take it in relation to the business, to the revenue, then it's twice or even more compared to Cintas. Something that I want to, that I'm using all the time, these 6 viable KPIs. It's market position, innovation, productivity, HR, profit and cash flow, and liquidity. And everything is interconnected, of course. And when you then discuss this with Cintas and Elis, then you have a plus for Cintas because the market share of Elis is 25% in Europe. So we are talking a little bit less than 40% for the target market of Cintas. So I think there were something like 37 according to UniFirst, 37, and versus 24. It's easier to roll out an innovation. So when you have a garment dispenser, for instance, for Cintas, and you make the rollout in the States, then it's easier to apply it for the whole business. And when you do it for Elis, then you have a real issue because they do not even have a common software. So there are, I think, 4 or 5 or 6 different software applications right now at Elis.